A stablecoin demand for U.S. Treasuries, question mark. David Sachs is on the record saying, if passed, the U.S. stablecoin bill will result in trillions of dollars of demand for U.S. Treasuries. How does this make sense? Stables are bought with fiat. You're still buying toilet paper regardless of what you transacted with fiat or stablecoins. Have I missed something? Thank you for your tireless work. You've changed countless lives for the better. Yeah, this is a tricky one, but you've got to understand money makes the world go round, and stable coins offer a better way to grease the machine. And I always say that the dollar is the cleanest shirt in the laundry. All fiat is bad, just a question of how bad. Some are a lot worse than the others. So these are my reasons for trillions in demand, and really to support David Sachs and his point. One, the massive market potential. We already have nearly a $250 billion of stablecoin in circulation. And as the market cap goes up for crypto, that'll grow too. Soon it'll be half a trillion and then 1 trillion. So when he says trillions in demand, it's already getting there pretty fast. Also, we have mandated treasury requirements too. The Genius Act requires stablecoins to be fully backed by high quality assets like treasuries, which is so important as well for the US. It's all related. If they can make the stablecoin get adopted, that drives the demand for US treasuries. Like Tether is one of the biggest buyers of treasuries today. And that creates inflows into structural demand for government debt. The US government has a problem right now. They can't sell their debt, but this could drive a lot of new demand too. And unlike traditional fiat use, stablecoin issuance locks reserves into treasuries, creating additional, not substitute demand for these treasuries. And dominance abroad is going to be critical. Support global adoption of USD-backed digital assets. You know, if wherever you are in the world, if you offer somebody, say, currency X or a dollar to anybody anywhere else in the world, odds are they'll choose the dollar. Again, it's the cleanest shirt in the laundry. And that's why I believe in David Sachs, and I believe it could result in trillions in demand. And if anybody has additional points, these are just my 5. Drop them below in a comment. Next, Papa Crypto. With an earnings miss and an almost 20% pre-market drop for Enphase, would this be the moment to run into the burning building or shun it and let it burn? With future AI needing so much energy and solar being so readily available, shouldn't this stock trade higher based on future perspectives? Thank you. And also never finished. I see questions rise about Enphase, etc. And I tend to focus on the real high alpha assets. So I don't talk too much about things that I think have struggles or problems. But first of all, slowing growth is the kiss of death. This is Enphase. Their growth trajectory. Blue is revenue. You can see they peaked in 2022, down in 2023, and down more in 2024. That could probably continue in 2025. Also, earnings growth. They are profitable. They had an earnings miss, but they still make a little bit of money. But the problem is earnings growth is down too. These are not good things. The market doesn't like it. Also, I dug into the financials. They have egregious stock-based compensation. I mean, what executives line their pockets with such high stock-based compensation when they're not growing? They're not performing. What's going on? And I hate this. Whenever I see a company with high stock-based compensation, it's always a big turnoff for me. So I don't like that. Let's look at the ATR chart for this asset. We are in the zombie zone. It's at level 0.5, which is good. The trend is down only since 2022. Not good. Not good at all. Got through the bear market. It actually went up in the bear market for stocks. It went up in the bear. So it's a contra type cycle. And I hear you regarding solar and energy and AI. It needs so much energy. That's true. But there's a couple of things that I think are the problem. One is weak earnings and missed guidance. Market hates that. There's like, don't like. Also declining demand, especially in Europe, where they've got a key market that hurts everyone. And Tesla, their Powerwall 3 has an inverter, which competes directly with Enphase's products. And analysts lower price targets. Clean energy faces as tailwinds because of the current administration. There won't be as much tax credits, etc. So there's a lot of uncertainty regarding these, and the market just does not like it. So I wouldn't touch it. Sometimes things are cheap for a reason. And like if you look at things like Square and PayPal, way off their highs, but continue to languish. And that's why I always say as well, always balance risk and reward. Okay, it's not hard to be in the winning assets. Okay, I spend all my time making sure I am positioned, and some assets could run faster than others. But I'm going to share the slide one more time. All right, this is where the money has been and where it's going. Okay, Tesla, Bitcoin, Nvidia, MicroStrategy. That's it. Solana. Those 5 things, they are the best risk rewards I can find right now. And they don't all run at the same time, but just consider that as well when you make investments. Don't try to chase things that are cheap. They're cheap for a reason.